Welcome back, and yes, in today's video, we're going to be discussing the Blackrock fund that is now tokenized on the Hedera blockchain. And amidst a slew of calls saying that this is not actually what is going on and that BlackRock doesn't have any funds tokenized on Hedera, it is actually true, and we're going to be discussing all of that. I'm going to show you guys some of the conversations on X about this, and we're going to get into that, along with Kathy Wood is now saying you need 6 Ethereum to become a millionaire. Ledger has now added DeFi, and we're going to be starting right here. Ledger Live to offer crypto swap and instant buy services through MoonPay. And by the way, if you want a Ledger offline storage wallet to hold your crypto, use my link down below in the description of this video. It takes you right over to the Ledger website. You can get all of the sales that they have, any of the devices that they have or accessories, and it lets them know that I sent you over there. It does help support this channel, and so if you're getting a Ledger anyway, use my link down below in the description of this video. But now we are hearing that Ledger and MoonPay are rolling out several digital asset focused services for customers. They said in a statement that they're going to be offering on Ledger Live instant processing of crypto purchases through MoonPay and add support for the payment service token swap. As part of the collaboration, Ledger Academy will launch new self-paced crypto trading tutorials and other learning resources for their users, including content focused on MoonPay services. So a nice little collaboration over there. We're also now seeing that Arthur Hayes is saying that it is time to buy crypto, saying prices will get sillier to the upside. Now, we follow Arthur Hayes on this channel. He is a very well-known trader, former BitMEX founder and CEO. And, as I've been saying, in my view, I thought and I believe that we were going to see a, capitulation point before the Bitcoin halving. And we really didn't see the kind of capitulation that I was anticipating. We have seen the prices dip a little bit. And we have seen kind of toppy moves in the market, right? It kind of looks like we've almost reached a top, or at least a local top. But there's a lot of conversation, including on this channel. Maybe I was wrong. Maybe we're not going to have the capitulation that everybody's been anticipating. And maybe just the movements that we've seen over the last few months with kind of the sideways consolidation and downward movement in the markets, maybe this was the capitulation. I don't know. I mean, I think we have to wait until the Federal Reserve speaks in May, in beginning of May, and kind of lets us know what they're going to be doing. But Arthur Hayes is basically saying the next couple of months will be the perfect time for investors to top up their crypto positions. The continuous debasement of global currencies by their respective governments has created a favorable environment for assets like Bitcoin, according to Hayes. He said, whatever the flavor of crypto risk excites you, the next few months will present a golden opportunity to add positions. He says, I want to remind readers why the bull market will continue and prices will get sillier on the upside. He says that crypto is heading into a period of less volatility, which makes it a perfect hedge against rising inflation. He predicted that inflation will continue to rise as the government in the US, China, European Union, and Japan keep debasing their currencies to deleverage their government's balance sheet. As it stands, the national debt in the US is $34.6 trillion. And according to Hayes, the situation is only going to get worse. And so, yeah, he said, until the time that everything collapses, let your winners run. So this is a kind of in line with what we have talked about on this channel, that I believe that, I think that this summer, right, up until about August is it's going to be good buying opportunities. We've been buying here. I know a lot of you guys have been buying, and I think that there's still going to be more corrective. We haven't really seen a correction in most of the cryptos. Some cryptos we already have. Some stocks we already have seen 50% corrections over the last year. I mean, just take, for instance, Tesla stock. While the rest of the major like tech brands have been going up over the last year, Tesla effectively over the last, less than a year is down over 45% from the yearly high. And so some of those have come down. Some of the cryptos have already come down in value, but they may be coming down more. And this could bring a potential opportunity to buy and, increase your positions for the upcoming bull run. Because when you think about it on like a macro scale, the bull run is not that long, right? We're already in the bull run territory. So if this lasts about 12 to 18 months after the Bitcoin halving, well, the countdown is already on. This brings us to Kathy Wood. Kathy Wood says holding 6 Ethereum could make you a millionaire. So, at an investor conference, she spoke about Ethereum, noting that the project could reach a market capitalization of $20 trillion by 2032. And by the way, I forgot to say this at the beginning of the video, but this is the Cryptoviser podcast. Don't forget to give the video a free thumbs up. We upload every single day of the year to bring you the latest happening in the financial world. Also, give the video a thumbs up, hit the subscribe button. If you want to become a channel member, click the join button to learn more. And so Ethereum currently has a supply of around 120 million tokens, so a market cap of $20 trillion implies a price per token of $166,000. Additionally, the Ethereum Foundation continues to burn tokens, so this number could go even higher. And so at the price of $166,000, 6 Ethereum would be roughly $1 million. Currently, 6 Ethereum costs around $20,000. Now, here's the deal, guys. Do I believe that Ethereum is going to hit $166,000? Probably in due time, but not this cycle, right? Not even probably next cycle. I mean, it's possible, but it's not likely. I mean, but going back to what Arthur Hayes says, we don't know how much money they're going to be printing. We don't know what other mechanisms of, debasement we're going to see and how much more de-dollarization and the acceleration of that we're going to see. So I don't know. I don't know that we're going to necessarily see $166,000 for 1 Ethereum. I mean, Bitcoin hasn't even hit $100,000 from when I'm recording this video. So talking about Ethereum hitting $166,000, this is pretty way off. But again, Kathy Wood has a much longer time horizon. And so she gave some reasoning behind this claim. She discussed mainstream adoption. Ethereum mainly serves as a way to directly interact with a host of DeFi applications. These projects can provide benefits ranging from borrowing and lending to storing health records. According to Wood, if Ethereum can begin to rack up the use cases that are beneficial to users and adoption could follow, this could theoretically increase the price of the coin. And she also talked about Ethereum ETFs, but you guys kind of know my view on that. I don't necessarily think that we're going to see it getting approved anytime soon, but I could be wrong about that. Anyway, moving right along, we are now hearing that Blackrock, their fund, is now tokenized on the Hedera blockchain by Archax company, which is basically, I think, a fund manager. We're going to get into this in a minute. So this came out last week. And there was a lot of conversation about whether Hedera is really tokenizing a fund for BlackRock. And so all these articles came out like this. It says Hedera's HBAR token pumps 96% on misinterpreted BlackRock announcement. And so what was misinterpreted? Let's understand a little bit more. Well, first of all, the tweet itself, it says, today we witness real-world asset history as BlackRock's ICS U.S. Treasury Money Market Fund is tokenized on Hedera with Archax and Owner.io, marking a major milestone in asset management by bringing the world's largest asset manager on chain. And so this article says that the world's largest asset manager was only aware of the move on chain despite many believing it was actively involved. The widely misinterpreted post, according to Cointelegraph, to me it's not misinterpreted. We'll get to that in a minute, shared that blockchain trading and infrastructure firms Archax and Owner.io, whatever, tokenized BlackRock's fund on the Hedera network. Some crypto influencers with large followings shared the misinterpretation of the post, like this one that says BlackRock just tokenized one of their money market funds on Hedera. Cardano follower initially believed that BlackRock had no involvement with Hedera's development and slammed the HBAR Foundation for the way it framed the announcement. Meanwhile, I mean, in Cardano, they would have been to the moon already with this kind of thing. But here's the deal, guys. Nothing to me can be misinterpreted in this tweet. BlackRock's fund is tokenized by these two companies on the Hedera blockchain. Whether BlackRock made the decision to do it or not, whether BlackRock said to them, make sure it goes on Hedera or not, I don't think it fucking matters, to be honest. And so this whole conversation, to me, it seems salty. Other ecosystems being salty about this amazing Hedera milestone, right? That they're literally tokenized the fund for BlackRock on the Hedera blockchain. Whether it was Larry Fink who directed it or not, it doesn't matter. There's nothing to be misinterpreted here. And so this conversation about whether they did or did not know about this fund being tokenized into Hedera, of course BlackRock knows. And so we're going to get into the CEO's statement from ArchAx, that company that actually tokenized the fund for BlackRock. But before we go there, somebody said to the Hedera people asking, but is BlackRock actually involved? Do they know about Hedera? BlackRock owns the fund. So yes, they are involved and they know about Hedera. And Chris Hasker, who is the Swirled Labs, and he works for marketing at Hedera, he said, we had to wait for BlackRock to sign off to include them in the release, meaning the press release. So yes, they know. So all of this FUD coming from all of these other ecosystems saying, oh no, Hedera didn't actually do it. How dare the community say that? I mean, guys, this came from the Hedera Foundation themselves. Why would they lie about BlackRock when they posted BlackRock here and they're tokenized? They have the fund on the blockchain. Why would they lie about that? And so, yeah, it really seems incredibly salty, all these other ecosystems being like, oh no, this is misinterpretation. It's like there's nothing to misinterpret, right? Whether BlackRock directly ordered it on Hedera or not, doesn't matter. It's on the Hedera blockchain. It's not on Ethereum. It's not on Cardano. It's not on Solana. It's on Hedera. So Graham, who is the CEO of ArchAx, he said, fund tokenization, a thread which may help some with confusion. Let me set the scene and help, and please stay with them to the end, whatever. ArchAx is an FCA regulated broker, custodian, and exchange registered crypto asset provider in the UK. He said, we believe all financial assets are moving on chain, equity, debt, funds, etc. You name it, we think it's heading there. Since 2018, we've been carefully navigating the regulations to the point we're at now where everyone is talking about real world assets. We see a lot of RWA tokenization projects appear, but they often look like securities without appropriate regulation or ecosystem. We try to ensure everything they do is compliant, he says. I'm going to write this generally to avoid being jurisdiction specific, so please forgive if there's nuances. Issuances of financial assets have records of ownership. So he says if he sets up a company, he usually has a cap table showing the owners. That can be kept on a piece of paper, an Excel spreadsheet, database, or a distributed ledger technology. Traditionally, the medium doesn't matter, so as long as you have one. For a normal business, that's straightforward, right? Having your books, right? Knowing where the money is and where it's going. When you enter the world of securities, things become more convoluted. He says often, by the way, this is an 18th post thread. This is a little bit long. He says often the entity on the cap table is the custodian on behalf of an investor. This is the legal title holder who sits on the cap table holding the assets for the UBO. There can be many chains of custodians, both local and international, or CSDs. He says, incidentally, if you're okay, we're not interested in that other stuff. One of the things that we have worked on for years is how do you tokenize a fund correctly? A lot of our thinking is similar to that captured in the Thea.org in their blueprint for UK fund tokenization. The point is, when people talk about tokenizing a fund, there are a bunch of ways you can achieve it. The utopian version for the fund to be natively digital, whereby the books and records of the direct owners of the fund are recorded on chain. And any movement on chain causes the first level of ownership to change. In reality, that is difficult for a bunch of reasons, which include cost, regulations, and the way custodians and investors interact with products. Therefore, most tokenization projects you see are where counterparties or a third party hold the underlying and tokenize it on their books and records. ArchAx is looking at both natively digital funds and tokenized books and records. In the case of this company and BlackRock, I guess Hedera and BlackRock, ArchAx, to the knowledge of both investing managers, have been instructed by the clients to invest in their funds. Therefore, from the investment manager's perspective, they see the nominee company as the legal title holder. On their side, ArchAx, they believe beneficial ownership records of their investors, and it is these that have been tokenized. You invest in ArchAx, you receive a token representing your investment. So they are their records, and they get to choose the blockchain. He says, we call these beneficial owners tokens or bots, interesting, bots, beneficial owners of tokens are still securities in the UK that can be used in many of the same ways natively digital tokens are. This is the main reason that they're tokenizing real world assets to increase functionality such as transferability, use of collateral, and automated lifetime management of the asset. Every asset, he says, you invest in becomes more useful beyond the intrinsic value. When working directly with an investment manager, ARCAX will always need to open accounts and may also have other agreements with them as well. Therefore, the investment managers always sees ARCAX investing. He says if we decide to tokenize, arguably we don't need to approach the investment manager, but we always do as we want long-term relationships. The investment manager's level of involvement can vary from both what you saw with BlackRock and this other company, where they were aware that they were tokenizing the fund on Hedera. He says neither objected, hopefully due to the integrity and regulatory permissions. He says, I encourage you wherever possible to read the official press release associated with the news, and you'll find other interesting stuff on these companies. So effectively, he's saying they have the right to tokenize. They do tokenize. Do they need to tell BlackRock that they're tokenizing? No, but they did because that's their client, and they want to make sure their client is okay with what they're doing as part of transparency. That's what I read from that. That's what I read from this post from the HBAR Foundation. So whether BlackRock directly did it or they did it through an investment manager, which you would imagine there's probably a lot of throughout the United States, it doesn't matter. It doesn't matter. And so, in my view, this is a huge step forward for the Hedera blockchain, for HBAR crypto. From my understanding, the HBAR coin pumped 96% and then dumped immediately after. Let's pull this back to the 1 month. Yeah, you can see HBAR was at about almost 9 cents and it went up to 18 cents, so basically doubled, and now we're basically at 13 cents, so right kind of in the middle from where we were and where we were at the peak. Listen, guys, again, I don't think it freaking matters, right? We are now in the bull market, right? So you're going to see a lot of announcements popping up, and a lot of people are going to be skeptical of these announcements because previous cycles we've had a lot of fake announcements or announcements that were over exaggerated with many different projects. But here's the deal. The top 20 crypto projects are about to be shaken up. That's what I think is what's going on, right? There's 23 projects above Hedera, and Hedera is moving up rapidly, $4.5 billion in market cap. And so there's a lot of ecosystems here that are primed to pump forward. Near Protocol, Polygon, Internet Computer Protocol, and apparently Hedera as well, and even Aptos, right? These are in the top 30, and these are set to pump, in my view, right? Nothing I say in these videos is financial advice. These are just my opinions. I could be wrong about anything and everything that I say, so make sure you guys do your own research and understand what you're investing in and the risks involved. Do I own HBAR? No. Will I own HBAR? Probably. I mean, the more pushback that these blockchains get for actual utilization of blockchain for real world assets, like for real money or real property or real title or ownership, these are going to be the winners, guys. They're going to be the winners. Because as we've been discussing, there's a lot of projects out here in the top 100, 200, and they haven't been doing anything during the bear market, or they haven't been focusing on where the markets are going. They want to focus on what they want to focus on, and basically these blockchains are going to roll out of irrelevance. We've seen this happening cycle after cycle after cycle. Look at EOS, look at IOTA, look at some of those other NEO, right? Some of these tokens that were top 10 tokens, top 20 tokens for a very long period of time, no longer even in the top 50. And so as I've explained, I'm looking at Near Protocol, Polygon, Internet Computer, now HBAR. I'm looking at all of these that are being integrated with traditional finance. This is why USDC is so important in my view, because that is the integration to traditional finance. And the blockchains that don't have it now, I don't think are going to have it in a year from now. Because why wouldn't they be? If they did have the technology to implement these things, why wouldn't they do it now? If they do it in the midst of a bull run, yeah, it's going to potentially pump the price, but then it's going to come right back down because there's nothing else to look forward to at the end of the bull market. then we saw this happen the last cycle. And so, yeah, to the HBAR community, make sure you guys are subscribed to this channel because we are going to be doing more coverage on HBAR and understand whether it is an investable asset or not. I really don't know that much about HBAR. We have covered it previously on this channel. I know they use Hashgraph versus like traditional blockchain technology, but we will do a separate video on exploring Hedera. Is it an investable asset? And I'll kind of give you guys my outlook, insight, and opinion on this asset. And I want to know what you guys think down below. And don't forget, while you're down there, to give the video a free thumbs up. Now, in other crypto news, we're hearing Jack Dorsey's Block, formerly known as Square. They've developed a 3 nanometer Bitcoin mining chip, and they aim for their own mining system. And so this is not really a surprise because we know that they've been kind of working on things. Again, they've been working on things in the bear market. If we pull up the 5-year chart on Block, you can see for the last few years, Block has not been doing that well from a stock market valuation perspective. And so all of the things that we're going to be seeing up this upcoming cycle, it's really what they've been developing, right? Meta has been working on the metaverse for the last 4 years, spending tens of billions of dollars on research and development for that. Are we going to see an actual product now? I would hope so, but maybe we won't. Same thing with Block, right? Block has a hardware wallet. Now they have a chip. They're going to potentially go into Bitcoin mining. Could be big for the stock and the company. So we'll have to keep an eye on this stock, see if it's, there hasn't been much movement, but that doesn't mean there's not going to be, especially if they are able to get the Bitcoin mining, operation off the ground, because I am generally speaking, very bullish on a lot of these Bitcoin mining companies, because based on the previous cycle, all the Bitcoin mining companies went straight up for the year and a half after the Bitcoin halving. We'll see if that replays, but Gryphon mining, Stronghold. I know some people don't really like Stronghold that much. The grid architecture or infrastructure, I should say. Hut mining, Wolf, TerraWolf. A lot of these look really, really good, especially on a macro view, especially if you zoom out and look at what the companies have done from a leadership perspective and an expansion perspective. A lot of them have been continuing to grow, and now we're starting to see this kind of move up. Every single time we move down, the lows are higher lows over the last few months or so, and that's usually a very good sign in the markets. And a lot of these that I just mentioned are under $1 billion market cap. Anyway, we're also now hearing that crypto exchange CoinEx is set to auction an epic Satoshi from the halving block for 1 Bitcoin minimum. So I don't know what it ended up at. The block encompassed 37.625 Bitcoin from a transaction fees alongside 3.125 Bitcoin reward that was on the day of the halving. This was like the first Bitcoin that was mined after the halving. And what we heard is a lot of these Bitcoin mining companies, if they got that Bitcoin, they were going to segregate it and then sell it off, and auction it as, the first Bitcoin created after the halving or at the halving. And so this is why it's considered a super rare epic Satoshi. The ordinal space introduced a novel trend that assigns a premium to specific Satoshis. A single Satoshi is represented by this. At present, it's this cost. Additionally, categories of Satoshi are this. We're not going to get into all of that. When Via Block located the halving block, it became the owner of one of just 4 epic Satoshis identified as the initial Satoshi in the first block of any halving event. On the social media platform, a user expressed hope that they would remain unaware of their find of the epic Satoshi. Nonetheless, they were quite conscious of the presence of it, as Foundry had informed the pool that all participants would gain if they uncovered this rare Satoshi within that block. Via Bitcoin, through its on-chain activities, was fully cognizant of the discovery of the subsequently segregated the Coinbase reward and fees into a distinct address. As of this report, the funds are still retained at that address, which holds the legendary epic Satoshi. Now, how much is it going to sell for? Who knows? Probably a ridiculous amount. But yeah, we will see. So yeah, a lot is happening in the crypto world, lots happening in the TradFi world, and really the merging of the two. And I'm really excited to see kind of how this cycle goes and which are going to be the winners, which are not going to be the winners. And I'd love to hear your opinions down below in the comments. Don't forget to give this video a thumbs up, hit that subscribe button, turn on notifications, and I will see all of you right here tomorrow on the next video, Crypto On.